I think the first thing we know is, and this is going to come as a surprise to a lot of people, is that the SEC has not in fact dropped any and all of its potential enforcement actions against crypto companies. There was a move over the past couple of months for this very important financial regulator to say, hey, when it comes to crypto, we're largely not going to be looking into most things. So it was interesting to see, both the New York Times story and then the confirmation statement from Coinbase that this was an ongoing investigation coming out of the Gensler era at a time when I think a lot of folks in the industry had thought, okay, good, all clear. There's no hangovers and we don't need to worry about anything.
Is there something different about this case than the cases that have been dropped?
I think one of the key points is it does relate to sort of a very bread and butter SEC issue, which is, are you being accurate and transparent in your disclosures? And at heart of it is this idea that according to the SEC's allegations, or I should say, according to the allegations represented in the New York Times story, Coinbase had previously used a verified user figure of 100 million, which they stopped using a couple of years ago. And according to the SEC, that figure was initially misleading.
So this is the second piece of news that we're getting in regards to Coinbase.
Just today, right?
Just today. This
today,
morning.
okay.
Yeah,
Yes.
Totally.
There was also a reported hack. Tell us what's going on with that.
Yeah,
so far.
this one is arguably a bigger deal in that it's happening now and it affects very sensitive customer data. So Coinbase put out a statement and a regulatory filing earlier today that hackers had targeted some of their overseas kind of contractors and workers and offered them bribes to steal sensitive customer data. Now, when we're talking sensitive customer data, we're not just talking about email addresses and passwords. It's like photographs of your government ID, things people would have had to submit to verify their identities. In some cases, it was, physical addresses, mailing addresses. So you can imagine with those government IDs, it's also things like date of birth. There might be other forms of contact information. So that is, in a moment in which crypto companies have been on a kind of a charm offensive since President Trump was inaugurated to say, hey, crypto is safe, it's reliable, it's the future of finance. To have something that comes in and sort of reminds people that crypto companies are high value targets for hackers the timing is a little bit challenging for them.
Well, speaking of timing, I mean, Coinbase probably wanted us talking about their inclusion in the S&P 500 this week, which was remarkable given the fact that we saw the stock move higher by 24% on Tuesday as a result of the news that it would be included in the S&P 500, replacing Discover of all companies.
Which, I think is kind of exactly what we're talking about here. If you think of Discover Financial as like the bastion of what some people in crypto would like to call old finance or traditional finance, and then kind of this crypto exchange coming in and being like, we're the future of finance. And then, the news cycle is like, time out. Some reminders about the risks embedded in innovation.
Does it, I don't want to ask you if it taints the moment at all, but for me, the news earlier this week about its inclusion in the S&P 500, it felt really symbolic as a recognition that this asset class was being recognized as a blue chip, essentially.
Yeah. And I think one of, having been somebody paying close attention to this for a minute, one of the things that really struck me is that feels like it happens all the time. Like, Emily, you remember when we were doing stories about the Super Bowl of crypto when you had FTX and others being like, come join, do these amazing things. And then what happened to FTX very shortly after? It filed for bankruptcy. Sam Bankman-Fried was in handcuffs being accused of massive fraud. And so like crypto goes through, much like crypto prices themselves, these moments in which that long-awaited day for many executives is institutional acceptance, retail acceptance, and Tim, to your point, this idea of we are a legitimate asset class, we are a contender, you should take us seriously. And then something happens in the market where they're like, or here are some bad things that could happen instead.
But it's interesting because now that if they want to be treated like a public company in the S&P 500, they're going to be up to the scrutiny of just like any other public company. So I thought it was a very interesting point that you made in the beginning, that like this SEC probe, it's not unique to crypto companies.
Certainly not. And, we're in an interesting period in which crypto companies, when they're being scrutinized, it's not because of the assets underlying them, right? It's more like you are doing big company things. This is the big company behavior we expect.